In today's ever-changing market, deposit pricing has become more complex and critical than ever before. Interest rates have been experiencing unprecedented volatility. From prolonged periods of low rates to sudden spikes, the banking industry is facing a unique challenge in determining the right pricing strategies for deposits. This points to a growing risk of a price war for deposits, and bankers are concerned about spiraling costs. But that's not all. Now customers have higher expectations. There's new regulations in place and competition is fierce. So what can banks do to get deposit pricing right? In what ways can pricing strategies help restore banks' profitability and stability? The answer lies in precision pricing. This is a science-based approach that introduces a new level of precision and agility to deposit pricing decisions. It is centered around four elements: flow of funds, whereby banks develop a 360-degree understanding of their deposit base through the internal and external funds movement. Elasticity modeling, because measuring price elasticity is critical. Customer segmentation, especially based on rate sensitivity, is essential and requires looking beyond traditional demographics. Here it's important to consider unique characteristics like saving needs and preferences, channel usage, and price sensitivity. By segmenting customers based on these nuanced characteristics, banks can tailor their deposit pricing strategies to meet the unique needs and preferences of each customer segment. Finally, we have price optimization. This is about creating a robust optimization engine that will enable banks to strike the perfect balance between profitability, competitiveness, and compliance. Banks must also leverage customer psychology and behavioral biases to maximize the benefits of precision pricing. Traditionally, pricing models have been built without regard for customer psychology and biases. Banks must ensure that their new pricing models always account for the human factor. This includes both the consumer as well as the frontline bankers or relationship managers, as might be the case on the wealth or commercial side. Deposit products, like many others, have a psychological pricing threshold known as the zone of indifference. When there's small changes in price within this zone, there is no significant impact on customers' perceived value of the offering. And by taking these strategies into account, banks can benefit in two major ways. First, it helps banks assess the competitive landscape better. Secondly, it also helps optimize the deposit pricing model that actually aligns with customers' psychological tendencies. All this goes to show that in times of interest rate volatility, deposit pricing requires a meticulous and data-driven approach. It is through embracing precision pricing and leveraging advanced analytics that banks can optimize their pricing strategies, enhance profitability, and maintain a competitive edge in the